Every time someone books a hotel room, it looks like a simple transaction. In reality, a billion-dollar algorithm has already decided the price, predicted your behavior, and optimized the hotel's profit before you even clicked Book Now. The hotel business looks deceptively simple. Build a hotel, fill the rooms, collect the money. Repeat, but that's not how the world's largest hotel companies actually make billions. Behind every reservation lies one of the most sophisticated business models in modern capitalism, a global network of brands, loyalty programs, pricing algorithms, franchise fees, real estate investments, and technology systems that operate around the clock. Today, companies like Marriott, Hilton, Hyatt, and Intercontinental manage or franchise thousands of hotels across dozens of countries. Millions of guests check in every week. Billions of dollars flow through their booking systems every year. Yet here's the surprising part. Many of these companies don't even own most of the hotels carrying their names. So how does a mega hotel chain actually make money? And why is the booking engine far more valuable than the building itself? Let's check in. Hotels aren't just selling rooms. Most people think hotels sell accommodation. Technically they do. But economically they're selling something much more valuable. Temporary access to real estate. Unlike an apartment owner who rents one tenant for a year, hotels sell the same room hundreds of times every year. A single room might generate revenue tonight, again tomorrow, again next week, again next month. That repeated monetization makes hotel real estate incredibly productive. Every empty room, however, represents lost revenue that can never be recovered. If room 814 remains vacant tonight, that night's income disappears forever. Tomorrow cannot replace it. This simple reality drives almost every business decision inside the hotel industry. Occupancy is everything. Imagine a luxury hotel with 500 rooms. Even if each room costs $400 per night, profits disappear quickly if occupancy falls. Fixed costs remain. Mortgage payments, staff salaries, electricity, security, cleaning, maintenance, property taxes. These expenses continue whether guests arrive or not. That's why hotel executives obsess over occupancy rates. A hotel that's consistently 85% occupied often performs dramatically better than one averaging 65%. Keeping rooms full matters just as much as charging premium prices. Dynamic pricing never sleeps. Have you ever searched for a hotel, returned an hour later and discovered the price had changed? That's not random. Modern hotel chains use sophisticated revenue management systems that constantly adjust prices based on demand, season, weather, major events, flight bookings, local conferences, competitor pricing, remaining room inventory, historical booking patterns, even the day of the week. If demand suddenly spikes because of a concert or sporting event, prices rise automatically. If bookings slow unexpectedly, discounts appear. The goal isn't charging one fixed price. It's charging the highest price each guest is willing to pay. The booking engine is the real business. Many people assume hotels simply list rooms online. The reality is much more complex. Every reservation passes through an enormous technology ecosystem. Availability, pricing, payment processing, guest preferences, loyalty status, room assignments, cancellation policies, upselling opportunities. Everything happens within seconds. The booking engine doesn't simply process reservations. It predicts behavior. It recommends upgrades. It markets additional services. It encourages repeat visits. In many ways, it's the digital heart of the hotel business. Without it, managing thousands of properties across multiple countries would be almost impossible. Brands create pricing power. Why would someone pay more for a Marriott, Hilton, or Hyatt than for an unknown hotel nearby? Trust. Guests already know what to expect. Clean rooms, reliable service, comfortable beds, safety standards, reward points. That familiarity reduces uncertainty. People willingly pay a premium for predictability. Over decades, hotel companies have invested billions in building brands that travelers recognize instantly. The logo itself becomes a valuable economic asset. Loyalty programs are billion-dollar machines. Every time you stay at a major hotel, you're encouraged to join its rewards program. Free nights, room upgrades, late checkout, exclusive discounts. These programs aren't simply marketing tools. They're among the industry's most valuable assets. Loyalty members tend to book directly, travel more often, spend more per visit, remain loyal for years. Direct bookings are especially valuable because they avoid paying commissions to online travel agencies. Keeping guests inside the company's own ecosystem dramatically improves profitability. Restaurants are more than amenities. Many luxury hotels generate substantial income from food and beverage operations, breakfast buffets, fine dining, room service, bars, coffee shops, banquet halls, wedding receptions, business conferences. A successful hotel restaurant often attracts residents in addition to overnight guests. For luxury properties, food and beverage operations can become major revenue generators rather than simple guest conveniences. Luxury suites change the economics. Not every guest contributes equally to profits. Standard rooms provide stable occupancy. Luxury suites provide exceptional margins. Presidential suites may cost thousands or even tens of thousands of dollars per night. Yet they occupy relatively little additional space. High-end guests also tend to spend more throughout the property. Private dining, spa treatments, airport transfers, personal concierge services. The wealthiest customers often generate disproportionate profits. Technology reduces costs. Modern hotels increasingly rely on automation, mobile check-in, digital room keys, AI-powered customer support, smart energy systems, automated inventory management, predictive maintenance. These technologies reduce labor costs while improving guest experiences. Even small efficiency improvements become significant when applied across thousands of hotels worldwide. Real estate still matters. Although many hotel companies don't own their buildings, location remains everything. Airports, business districts, tourist attractions, beachfront property, major highways. Prime locations command higher room rates and stronger occupancy. That's why real estate investors continue partnering with major hotel brands. The building provides the location. The brand provides the customers. Together, they create value neither could easily achieve alone. The biggest costs. Despite billions in revenue, hotel companies face enormous expenses: labor, utilities, property maintenance, technology, marketing, insurance, debt, taxes, economic downturns, travel disruptions, pandemics. Hotels must continue operating through all of these challenges. That's why strong cash flow management becomes critical. The business can be incredibly profitable, but only when rooms remain occupied. Why scale wins? Imagine operating one independent hotel. Now imagine operating 9,000. The larger company negotiates better supplier contracts, builds stronger loyalty programs, invests more in technology, spreads marketing costs, collects more customer data, improves pricing accuracy. Scale creates competitive advantages that smaller hotels often struggle to match. That's one reason consolidation has become common throughout the hospitality industry. The bigger lesson. The hotel industry teaches an important economic principle. The most valuable companies don't always own the most assets. Sometimes they own the system connecting those assets. Brands, booking engines, customer relationships, technology platforms, loyalty ecosystems. These intangible assets often generate higher returns than the buildings themselves. In today's economy, managing demand can be even more valuable than owning supply. Final thoughts. At first glance, a mega hotel chain appears to be in the business of renting rooms. In reality, it's operating one of the world's most sophisticated ecosystems of technology, branding, pricing, customer loyalty, and real estate partnerships. The room is only the beginning. Behind every reservation lies a powerful booking engine that predicts demand, adjusts prices in real time, encourages repeat business, and quietly maximizes profitability around the clock. That's why the biggest hotel companies have become global giants, not because they own every hotel, but because they own the systems that keep millions of rooms filled every single night. The next time you book a hotel, remember, you're not just reserving a room. You're entering one of the most advanced revenue machines ever built in the travel industry. If you enjoyed this breakdown, like the video, subscribe to the channel, and drop a comment below telling us which billion-dollar business model you'd like us to uncover next. Thanks for watching, and we'll see you in the next one.